Hey fam, today we're going to look at my investment tier list, considering factors like risk, return, and other variables that I value the most. As we talked about, investing is allocating your money into assets that hopefully will give you financial benefit in the future. There are thousands of options of investment vehicles that you can choose to put your money, like stocks, bonds, ETFs, cryptocurrencies, commodities, options, futures. So I will rate all of these investments with my profile, my preferences, and my opinions about investing. Comment down below if you agree or disagree with any of the things that I talked today on this video. So let's start. The first and most classical investing that most people tell you, even your grandparents, is your house is your greatest investment. So I'm going to combine for practical purposes houses, real estate investments, real estate investment trust, real estate investment funds, and all of the things that are related to real estate, houses, into one single investment, excluding more advanced things like derivatives on contracts about real estate. So in my opinion, real estate is in the B tier. Why? It's not great and it's not the worst investment out there. It's the single most famous asset for people to become millionaires. You have people that are arbitraging Airbnbs, people that buy houses to later rent them. But I see a lot of risk, and we have seen that in 2008, where people think that home prices have to go up, which is not true. We have seen that home prices go up and down all the time like any other asset. But the important thing is that you have the risk and you have to take the time to look for somebody to rent, in the case you are buying a house for renting. But if you have money allocated into real estate investment trust or real estate investment funds, I believe it is a good investment because you can have very good returns on your investments depending on the country and the market that you're looking. And also there are some tax incentives, especially in the United States, where you can take all of those profits and defer the payment when you buy another property, and you roll over these tax obligations until you decide to pay capital gains tax and you don't want to no longer buy another property because you decided it's time to pay taxes and live with all the profit that you made. In my opinion, it's not great and it's not the worst investment. So it's in the B tier. Then we have what I'm going to group as fixed income, which are savings accounts, certificates of deposits, and anything that is fixed income. You have a fixed interest rate at the beginning of the contract, so you know what money you're getting every single period. I believe this investment is in the C tier. Why is not the worst investment out there, knowing that you have so many options with better returns, with little additional risk? I believe it has a role. These types of instruments should be used for your emergency fund, I would say only. Also, businesses would use this type of investments for their treasury funds. So if you have money, cash, you don't want your money to be there without returning any interest at all. That's the case for a business and also for a person. So it serves a purpose to have a low risk, low return asset for your emergency fund or for your treasury funds for a business. So it has a purpose. It's not the worst investment out there, but for me, is in the C tier. Then we have another type of fixed income asset, but it's more attractive in my opinion, which are the corporate bonds. I think that corporate bonds are very interesting because you have the nature of a fixed income, but you have the direct approach of assessing a business financials with their financial statements. You can assess the financials of that business and have a, let's say, safer investment than the stock to put money into fixed income securities. So I believe this is next to real estate. It's in the B tier. It's not the best investment out there, but for fixed income purposes, I believe that it is a great option for you to have a return with lower risk than the stock market. Then we have my favorite investment, my opinion, which are stocks. I'm gonna put it right here in the A tier because stocks have been historically known for making people rich. The interesting thing here is that buying stocks can mean a lot of things. I'm not talking about day trading. No, I'm not talking about individual stock picking. I'm talking about buying stocks that you value, you use fundamental analysis, and you invest in the long term for that stock. So I'm not talking about swing trading or day trading because that has been proven statistically to make people lose money overall. If you are the 1% that makes money trading, good for you. You are a beast, but we have to take into consideration survivorship bias, which means that people that lose money on the stock market by day trading will not post and be like, yeah, I lost $1 million in the internet, right? But people that want money would do that. So you have this bias where people that lose money will not post it, but people that do post it. So you think that there are more people winning, But in reality, it's the other way around. Stocks, as you can see in graphs like this one, you can see that stocks have been historically known for better returns compared to bonds. They have beaten inflation mostly all of the time. They have beaten gold and other assets that people usually choose to put their money in. So why do I like stocks so much? I like stocks so much because of the wide variety that you have. You can choose any stock from the United States, Mexico, Canada, Europe, Asia, South America, Australia, and you can assess their financials and do a fundamental analysis like Warren Buffett does to do value investing, because any stock that is traded publicly on the stock market has its financial statements available for you to analyze. And you can create any portfolio to align with your risk profile, with your return profile. So you can create a portfolio that aligns with what you want and you expect and the risk you are willing to take. Also, stocks are known for having very good Sortino ratios, which means that they have a greater percentage of return for every point of downside risk that you have. So in my opinion, it's not in the S tier, but it is very close to reaching that point. Why not in the S tier? Because right now we have seen a lot of overpriced stocks. We can see that in tech with PE ratios of 70, 60, which means that in theory you would get your money back with only earnings per share in 60 years, which is mind-blowing for me. But nonetheless, stocks keep proving to be one of the best investments for you out there. But a better option than stocks, in my opinion, are investment funds. I'm gonna put investment funds as a group, mostly based on mutual funds, index funds, and ETFs. Warren Buffett has said multiple times that if you want to be rich and not stress about analyzing a lot of stocks, just buy a low commission S&P 500 index fund or ETF, put your money there every month and forget about it. You will be rich in 30, 20, 40 years, no matter what you do. You cannot mess this thing up. So why are investment funds, ETFs, better than stocks? In my opinion, because you get the power of diversification, which means that you have lower unsystemic risk. So you get the best of both worlds, good returns of the stock market, but with lower individual risk of an individual stock. Also, if you're not a financial expert, why would you invest your time into actively trying to manage your portfolio when it has been proven that most people that actively manage funds, like hedge fund managers, do not beat the S&P 500. So people that have studied that in university, have that experience, cannot beat the market. Why would you try to do that if you have another career? If you're an engineer, a lawyer, or a doctor? So I believe this investment is great because you have the best Sortino ratio possible for an average career path. So if you study anything besides business and finance, you can put your money into this asset and leave it there, and in 30 years, most probably you will be rich. Then we have tax-incentivized instruments. So it all depends where you live. It not only depends on where you live, but what specific industry does your country want to incentivize. So why do I believe it is a good investment? I'm gonna put it into the B tier because most of the times tax-incentivized industries are not very good or do not have very good metrics most of the times, but still, having that tax incentive, you will not have to pay taxes on the return that you'll have. So for example, in Brazil, you have these things called incentivized bonds, where you have bonds made specifically for infrastructure purposes, for building highways, bridges, and what else. But usually those kind of constructions do not yield as much return as you think. But still, compared to other alternatives like fixed income, you have countries with high capital gains tax and high income taxes. So that extra return that you have gets diminished by the tax bill that you'll have at the end of the period. But with tax incentives, you have a return tax-free. So you have to assess, sometimes the tax incentivized instrument that has a lower interest rate, at the end, the net interest rate is higher than the nominal rate of another investment that has to pay taxes on the income earned. Another example in Brazil is that you have these bills for the real estate industry and also for the agro industry, where if you are not a business, if you are a regular person, you get tax incentives. So any return that you get on these papers are tax-free. And we have arrived to the big boy. Yeah. We have two people that say, crypto is in the S tier. It's the new evolution of money. Banks are doomed. And also we have people that say it's a scam. It doesn't have any value. You shouldn't put your money there. And crypto is BS. My opinion on crypto, based on my experience and the things that I've learned reading books about finance and money, and also books about crypto, is that as all other investments, they serve a purpose. In my opinion, crypto does not have inherent value, which means that you don't get anything in return except somebody else pays you a higher price for your Bitcoin. So it's like a commodity, it's like gold, it's like oil, and we're not gonna say that oil and gold are scams, right? But they serve a purpose, in my opinion, and maybe it's going to create a huge debate in the comments. It's in the C tier. Why is in the C tier? In my opinion, I wouldn't invest my money into crypto because as one of the best investors in the history has said, Warren Buffett, it doesn't have anything inherently valuable in itself. I wouldn't like to buy something that I have to wait for somebody else to value it higher than me to get a return. I wouldn't, but I understand that it is decentralized, governments have no control over it, and I also understand that in some countries it has a use. For example, if you live in countries like Venezuela, Argentina, Bolivia, or African nations where your currency is being devalued every single day, maybe cryptocurrency could be a solution, because even though it goes up and down every day by a lot, it is still better than having your own currency. And I also don't look at as much as an investment at all. Why? It's even in the name. I didn't put Forex, for example, in this tier list because I don't consider it to be an investment unless you're speculating, so you want to buy the currency cheaper than sell it more expensive. I wouldn't do that if I were you. Cryptocurrency, it's a currency. It's supposed to be used to pay for things. And I haven't seen as much applications where you can pay regular things, unless you live in Salvador, with Bitcoin, with any other cryptocurrency. So that's my opinion. I would use it if I were living in a country where my currency is so unvaluable. It is being so bombarded by devaluation after devaluation that in order for me to be safe, maybe I would do it instead of buying dollars. For example, because in Argentina you can only buy a certain amount of dollars, for example. But if you're young and you want to make an educated bet into something that could make you a millionaire overnight, then yeah, maybe. It's like any bet. If you want to bet your money into sports, it's your decision, it's your money after all. But in my opinion, I wouldn't put my money on bets, and also I wouldn't put my money into cryptocurrencies at the moment. As we move along, maybe there are countries that will make their own cryptocurrencies, and maybe Bitcoin one day will change how we look at finance. But at the moment, with the things that I have learned from cryptocurrencies, finance, and how money works, I don't see as much value as other people see it in the cryptocurrency community. So now that we got the big fish out of the way, let's go to the derivatives. We have the three most common derivatives that are publicly traded in markets. We have futures, swaps, and options. So if you want to make money by investing into any of these derivatives like a speculator, I would say it's not a very good investment. That's why I'm putting all of them next to Bitcoin, because it has almost the same nature, where you are looking for somebody else to pay you more for that contract. But nonetheless, if you are a businessman or a regular person and you want to cover yourself from changes in prices, which is called hedging, I believe they could be higher up in the tier list. You don't usually do that, really, because, for example, in options it's not free. But let's say you want a better mortgage rate, you will actually use a swap to change that floating rate debt into a fixed rate debt using this type of derivatives. But most people do not use these contracts for that. They use it to make a profit, like day trading, which in my opinion is not the best decision for you. Unless you are a financial expert, you have experience and that's your career, then go right ahead and make profits with that. But if you're not using that for hedging purposes, or you are not a Jim Simmons and you have a quant firm that has the capability of finding disparities in prices and you can do arbitrage, I wouldn't suggest me to even look at these contracts in any scenario possible. And finally, which I believe are the two best investments out there in history. The first one is a portfolio. What do I mean by that? As we have seen, you have a lot of options. So why choose only one when you can have all of them or most of them? I believe you can have better returns, better risk profiles, and a better financial outlook if you learn to use all of them for your own purposes. So I would have a certain percentage in index funds, another percentage in individual stocks that I believe will be valuable. So let's say if you believe that Nvidia was going to be as valuable as today, you would have that stock 3 years ago. Also, you could have some real estate investment trusts, some government bonds, some tax-incentivized instruments, and even a little percent of cryptocurrency, just in case you are wrong and you didn't understand cryptocurrency and at the end it truly had value. So you cover yourself. You have this diversification that most people strive to have, even though some people say that diversification is an excuse for ignorance. I think you have more advantages than disadvantages to have kind of a mix of all the instruments out there. That's why, in my opinion, having a portfolio next to ETFs and index funds, which can be your entire portfolio, is one of the best investments out there. And in my opinion, even better than a portfolio or an ETF, the best investment out there is you. Yeah, it sounds like we are in the fairyland. We have to be realistic. You're a finance professional. You don't get any return. It's not like I can make money appear out of nowhere. But hear me out on this one. Investing in yourself, learning new things, learning how the world works, how to act with people, how to talk, how to persuade, all of these things that people do not find as valuable as they should, in the end will make you richer. How? In order to invest, you have to earn income. People think that you start investing and you will be able to live by your investments, but it usually takes more time to have that position. So the best way to have more investments is to grow your income. And how do you do that? By learning skills, hard and soft skills that will make you better prepared to get a job or better prepared to start your own business and have more income to invest in any of these options that you feel is the better option for you. So that's why investing in yourself, in my opinion, will make you richer, because as most people think in the financial industry, you shouldn't worry about where to put your money. You should worry only about putting your money in an investment you believe is going to do great and increasing those payments over time. So if you're not a financial professional, let's think it in this way. If you are a lawyer, how much money do you think you would have in scenario one where you're spending 3 hours of your life every single day looking at stocks, analyzing financial statements and things that you have not been trained to do in order to have a return that maybe you get a 2, 3, 5% extra return than an ETF or scenario B. So instead, you use those 3 hours to work on your business, to work in your job, to learn a new skill that will make you earn an additional 20% of your income in the next 3 years. That additional 20% income, you can put an extra percentage of that new income into investments. And at the end, you will have more money, not because you got a better return, but because you have more principal working for you. And that's why ETFs, your own portfolio, and yourself are the best investments out there, in my opinion. Comment down below if you think another investment should be in the S tier. And there you have it. That's my investment tier list based on my personal preferences. I'm not saying that you should have the same opinion as me, but that's my point of view. This tier list should be different for everyone, because everyone's situation is different. So we should have positive discussions in order to have the best investments for ourselves. Also, this tier list should change as you move along in this beautiful adventure called life, because if you are 60 years old, you shouldn't look for the best return, but for something else like capital security and maybe even tax incentives. Some investments will prove to be better than others, and also some investments will be good at the beginning and worse later on. We do not know, but history has shown that some assets tend to be better than others in specific scenarios. I wanted to make this video in order to have a fun discussion about investments, their nature, their advantages, their disadvantages, because sooner or later on your personal life journey, you will have to decide where to invest your money. And knowing all the options that are out there, their nature and their pros and cons will be very important for you when you get to decide where to put your hard-earned money. Millennials and Gen Z have the hardest conditions right now in order to be financially independent. And the solution we all have today is personal finance. If you want to learn how to start your journey in personal finance by budgeting, saving, and investing your money into financial independence, click here to find more about how to build a life where you are happier and wealthier than you ever dreamed before. I am super excited to see you on the next video. Have a great day. See you all in the next one. Ciao, ciao.